What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I have a hot high yield dividend stock that is hot right now. It has a very nice high yield. Its revenue's been pretty strong, and this is one that I'm actually going to contact M1 Finance for to see if they can add this to the fractional share portfolios for everyone, because I don't think it's listed on there. It's very interesting. This is an underrated stock. And by the way, I want to thank you guys. We made 11,000 subscribers. That was an excellent Christmas gift for me from you guys. So I'm going to continue to produce numerous videos. Make sure you got to hit that notification bell after you subscribe, because I'm posting videos. A lot of you guys watch my videos and don't subscribe. So you're going to miss out on a lot of videos if you don't hit that notification bell. And please subscribe. I'm telling you guys. I post videos and you guys will be like, hey, can you do this one? Can you do new tech? Can you do this one? I'm like, did you watch my video last week? You gotta hit that notification bell. I'm just being straightforward with you guys, because I mean, I'm trying to do a lot of remixes, but there's a high demand for a lot of stocks to review. And I also have to post videos of my dividend investing strategies because my philosophy is starting to change. Thing is, with this one's definitely something that I'm going to look at and study closely. I'm going to do an in-depth review for you guys. I'm definitely going to go over the pros and cons, because there are some pros and cons to it. There is a risk with high-yield dividend stocks. As you know, there can be dividend cuts. As I posted a video previously with BGS that I sold them before the dividend cut happened. So, you know, I'm very transparent with my purchases. I'm very, I don't like to pump stocks. I'm not a pumper. I'm very straightforward. My videos are free for you guys. So, you know, capitalize on that. That's why you got to hit that notification bell and subscribe. So let's check this stock out right now. And that dividend stock is Portman Ridge Finance Corp. PTMN is a symbol. Its previous close was 2205. It opened up at 2204. Its days range was 2184. Its 52-week range is 1926 to 2543. It's listed as undervalued. There's a volume and the average volume is pretty strong. The volume is 18,969. The average volume is 22,407. The market cap is 211.492 million. The beta is 0.87. PE ratio is 95.70. EPS is 0.23. Its dividend yield is 12.15%. So if you right here, it's very interesting. Its ex-dividend date is November 22nd, 2022. 1-year target estimate is 2433. So I wanted to go on Yahoo Finance to go over these guys first. So I'm going to go over these guys as a company. The Portman Ridge Finance Corporation is a closed-ended, externally managed, non-diversified management investment company that is elected to be treated as a BDC, or a business development company. So, under the Investment Company Act of 1940. In addition, for tax purposes, we have elected to be treated as a regulated investment company, or RIC, under the Internal Revenue Code of 1986. Our common stock is quoted in the NASDAQ Global Select Market under the symbol PTMN. The Portman Ridge invests in performing well-established middle-market businesses that operate across a wide range of industries. That's huge. It employs a fundamental credit analysis targeting investments in businesses with relatively low levels of cycles and operating risks. So let's check these guys out real quick. So here's their direct lending practice. So Portman Ridge invests in performing well-established middle-market businesses, as they said, that operate across a wide variety of industries. It employs fundamental credit analysis targeting investments in businesses relatively low levels of cycles and operating risks. So right here, the investment characteristics, right here, EBITDA size of 5 to 25 million. History of generating consistent cash flows and stable financial performance, identifiable and defensible market positions in industries with favorable dynamics, management teams with demonstrated track records and aligned incentives. So their investment structures. So the first lien loans, the second lien loans, subordinated debt, and equity co-investment are huge. So the last out also with their investment structures are important. The other thing that's important is their wide variety of industries and their diversification. They have aerospace and defense, business services, consumer products, education, food and beverage, healthcare, industrial, environmental sciences, logistics and distribution, manufacturing, and media and telecommunications. So that is huge as well. So a lot of these BDCs, we have to look in depth to see what they're about, because HRZN, like one of them that I invest in, those guys are focused on science and technology. So you have to be very careful. You have to do your due diligence. And of course, this is not financial advice for entertainment purposes only. Disclaimer in the description. Let's check these guys out a little bit more revenue wise and dividend history wise. So here's their revenue. This is in millions US dollars. 2015, they were 45. 2016, 36. 2017, they took a dip. 28. 2018, 27, they took a little dip. 2019, 26. 2020, they went up 42.76. In 2021, 80.08. So their revenue has been increasing, which is very attractive. So, one thing that is kind of a con is their revenue hasn't been consistent, but their pros are they're making a big comeback from the trends of the losses from 2015 to 2019, and then 2020 and 2021, they have increased their revenue, which is attractive. Now let's check out their dividend history. Let's start in 2019. They were 10 cents to 6 cents. Then they jumped up to 62 cents 2021, then 63 cents in 2022, and then 12, 13, 22, they're 67 cents. So their dividend growth in 5 years was minus 13.19. So again, these guys are kind of new, so you got to be careful. According to Zacks, their payout ratio is 80%. Number of dividend increases in the last 5 years is 4. If you bought one share, you made $268 with a 12.18% dividend yield. So there are some pros and cons. The payout ratio, of course, it's a business development company, so you're going to have a high payout ratio. But the revenue has increased. And as you know, with the rules of a business development company, 90% of what you make have to go back to investors. The same with real estate investment trust. So I'm going to actually contact M1 Finance to see if I can get these guys on M1 Finance. I also am really looking at these guys. Maybe at the end of January or before the end of January, I may buy them. I'm not decided on buying them yet. I like the high yield. I like the business development company model, which is very attractive. I like their dividend trends. And I like that they're a high yield dividend stock, and they're not too expensive. So I like high yield stocks. Again, buying a high yield stock, there is a risk, especially business development company. Something happens, they go flat, and then they cut their dividend. So always good to be well diversified in your dividend portfolio. So that's why I have REITs. That's why I have financial sector stocks. That's why I have a lot of stocks and not just, business development companies. They are very attractive. That is one thing that's very nice about these high yield dividend stocks is their dividend yield is high and their dividend distribution is high, which is very attractive to me as a dividend investor. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. By the way, with their website, another thing I forgot to mention what the cons are, I really couldn't find their portfolio with their investments, but their revenue is going up, so they have to be very transparent. So let me know, again, what you think of this stock. PTMN as a symbol. Is it a buy for you? Are you going to hold on to it? Are you going to closely look at it? I think it's very attractive, so I'm going to look at it before I pull the trigger on it, or I'm going to closely watch it. I'm undecided on that. Obviously, I'll make the announcement once I buy it, or if I buy it. I'm very transparent if I sell stocks as well. You guys take care and have a good one.